Yes, thank you guys to join here. And Nestor Protocol is a decentralized perpetual exchange. And basically we are doing is that we think that currently the decentralized exchange or decentralized derivative is not good. Like the DYDX, they use market makers to provide liquidity, and also like GMX, they use LP pool to provide liquidity. We don't think that it is a very good way or the way should be in blockchain. So based on what we are doing, and we provide a SCP model and to make everyone to trade with smart contract, and this smart contract can be the final seller or in the whole system and can provide infinite liquidity. So yeah, that's basically what we are doing. And actually, Nest Protocol has been founded through like 4 years ago. And first we are doing Oracle, decentralized Oracle, if you know us, and we are competitor of Chainlink. But unfortunately, the Chainlink they grow much faster than us. So we have more focus on the DeFi side, the derivatives trading now. And yeah, this is the first time we come to this Bay Area. So we are hosting this event to want to share more Web3 and DeFi knowledge, and with these founders of many project teams and with some investors. Yeah, that's basically what we want to do for this Bay Area Web3 talk. Okay, let's start our first panel, and our host is BK. Yeah.
Hello. Yeah, once again, thank you for Nest Protocol, holding this event. And let's start with the self-introduction by our guests, from Rod.
Hi, I'm Redg from edgein.io. I'm the founder and CEO there. Edgein provides context for you in Web3. We deliver company data, investor data, event data, and news data, all uniquely to a user. In less than 10 seconds, you can understand context of what's going on. We're doing it to make it accessible for you so that everyone in Web3 can have it. And it's only $15 a month, but we do have a code called Bernie King, or King Bernie. You try either one and it'll give you 3 months free. But for us, we just want to give this data back to the user so you guys can have an edge in Web3.
Thank you, Woody from Nest Protocol. I just introduced myself. Okay.
Hey everyone, my name is Richard. I'm the founder of Iterative Ventures. Some of you may know me. I started out in 2021, taking up a Facebook alumni group, and then just evolved from that period of time to become a fund manager, looking into the new, or I guess next generation technologies that could bring new use cases and tokenize different assets, et cetera, and just bring more stability to the ecosystem, et cetera, pushing the envelope of the technology. Thanks, Woody and Bernie, and as well as House of Web3 for organizing this event.
Awesome. Yeah, this is Stark, co-founder of Hypex. So we're NFT infrastructure companies focusing on to bring utilities and liquidity to NFTs. So we have a new product called dapps. So our goal is to trying to make NFT tradable as cryptos. So we bring liquidity to NFT, so therefore people can build different derivatives assets like options, perpetual tradings on our liquidity protocols without using Oracle. So therefore, we believe NFT is actually a good asset comparing with fungible token, because it can actually connect Web2 to Web3 and by adding different utilities. So therefore, imagine maybe in the next 5 to 10 years, there's a lot of real world assets can actually using NFTs to be on-chain and to be tradable as on-chain assets. So yeah, this is what we do. Yeah, thanks for hosting this amazing event.
Okay, so let's go to our Q&A session. We're going to start with what do you think as the main problems facing the DeFi industry? We're going to go from the Stark.
Okay, yeah. Yeah, well, that we're in NFT sector, but we're more considering ourselves as NFT-fi product, like NFT plus DeFi. I think one of the main problems in DeFi right now is the liquidities, right? We're seeing assets are actually divide into different chains. So therefore, one of the biggest problem right now is as assets itself, you have to divide those liquidities to different places. So therefore, as assets itself, it can actually very hard to concentrate it into one place. So if you're trying to trading those, assets in different chains, it's actually hard within the current, DeFi infrastructure. You have to go to different chains, deploy your pool into different chains. So that's the one problem that we've been seeing. And another thing is like, in the DeFi sections, we say a lot of smart money, they're actually not just buying into your protocol, but they're buying into your API. So no matter like what you build, as long as you're providing the good API for the investors, people are going there. So they don't really care about like how good is the product, as long as you can provide a high API. So that actually caused the problem, because like for a lot of new protocol, new DeFi protocol, they can actually by designing the tokenomics to incentive a lot of high API at the beginning, but later on, the values of their tokens actually diminished. So therefore, a lot of DeFi protocols are actually having a hard time to have a more sustainable models to keep their TVLs or their trading values high. So that's my opinion.
So I think the question is, what's the problem currently plaguing DeFi, right?
Yep.
So I agree with Stark where there's a cross-chain liquidity issues, but I also think that crypto has been very path dependent in the sense that it came out of basically a software product, right? So because of that, obviously, not everybody is technically savvy. And so because of that, the use case has been really limited to just certain cohort of users, right? And so with that, when I think about crypto, I think, or assets in general, I think that there are hierarchies of assets where there are ones that's really stable, right? Where it's backed by stable payment, it has physical product or physical presence, right? Like let's say land, houses, etc. Right? These are the things that has a lot of use case and therefore has deep moat, and therefore their volume or their price does not fluctuate. Also, it's an extension of how many people hold this kind of asset, right? And so because of that, that's where I see in the crypto space where we talk about, for example, shitcoins and all of these things, right? Where it lends itself to a lot of volatility, and it's very, very reflexive in a sense that when the monetary environment gets harder, crypto is an asset that falls much more than all the other assets. So either you get very excited or you get very fearful in this space, right? And so because of that, it's deterring a lot of serious players to come in. And so it's taking a bit of time to develop the use cases and all of that. But what I am really excited about is that the people in this industry are starting to realize this problem. And so if you look at Ethereum improvement proposals, they're starting to talk about yield generation for, let's say, NFTs, et cetera, right? Which I believe can actually be used for more stable assets down the road. So anyways, that's just my perspective.
Thank you, Richard. And actually, I'm very agree with what Stark just saying that two major problem now. One is liquidity problem, and the second one is APY. A lot of DeFi users they don't really care about what the protocol is or what the product is. They're just chasing for the higher APY. And that's also the things we met when we're running our project. And I think the more deeper problem of this scenario is that there is no real demand for this DeFi industry currently, because everyone is trying to chase higher reward, and because as I think the crypto, it can only be the asset. So in the asset management industry, this industry is still at very early stage, and there's a lot of things they're not regulated, but it's not regulated by the government, but not regulated by the consensus. There's a lot of projects that can just steal the money from users, and I think this is a major issue in this DeFi industry now, and yeah, and that's all.
Yeah, I know. I'm going to sound like the negative old man. It's good that I have a funny hat. I love hangovers. You know, I've always enjoyed them, the things that I do to get there. But at a certain point in time, I realized that I gotta stop doing the things that produce the hangovers. The reason why we have a liquidity problem is because we have a credibility problem. We had a credibility problem. We lost our banking rails, right? This is a serious fundamental issue of cult of personality and not following through on the things that we promised. And now we're carrying all these inflated valuations, so heavy, right? And the VCs don't even want to tell their LPs that they need to reconfigure. And what's happening right now is everyone's shifting attention to AI in order to pump up like these early valuations, because most of the funds that are getting in early are going to they're going to exit before like Series D or anything. They're pumping it. And then what's going to happen, which is good, is you have a lot of funds that rely on liquidity back on the Web3 market. So this is good because somebody's going to have to figure out how to get the money out of the system. The LPs will demand to get the money out of the system. And, you know, you're out raising. You know what LPs like? They're naughty. Like, they're the VC's boss. You think your VC's bad, LPs are bad, right? That's why I never want to be a VC. So in this like process, right, I think it's very, 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 very important to figure out how to build things that matter and how to understand that the teams that should be like building things that are dev communities should have a dev community person that's built a community before, not a cabaret person. There's a $1 billion company who the person that leads their dev community, their only job was a cabaret dancer. It's a $1 billion company. Guess where that company's supposed to make their money? In the cool dev creation things. They made all their profits in swaps. Swaps, right? If you look, 90% of their money in swaps, right? So this is a fundamental problem. They're chasing somebody else's flagrant mistake. And so if DeFi is going to be credible, we need credible people that know how to build credible communities, that know how to actually build things that are a little bit better than yield farms. Like what's the utility? What's the utility, right? So my big problem with DeFi, and I like it. Like there's a lot of things I like about it. You get to know me, I'm not that negative. We're builders. We should build things, not build grift mechanisms. And if we build things, everything else will happen. So, sorry, Brian. High horse. Back it up.
Yeah, that's very good. We're gonna move on to our next question, which is, what do you think the new opportunities of DeFi industry? Who wanna take the start?
All right, I can start. I think, you know, for DeFi right now, we've been seeing, you know, not many like very, you know, great innovations actually coming up the space. So we're seeing a lot of, you know, new DeFi protocols. They're literally just to change a little bit of the previous projects and make their, you know, maybe algorithms a little bit better. But we didn't see a lot of, you know, innovation stuff coming up. So in my opinion, because we're in like NFT sector, right? So I still believe, you know, NFTs actually will have a very great, you know, market potentials. Just like what Richard said, right? NFT can actually using as a DeFi to generate the yield. So that's actually one of our features that we're supporting to all the NFT collections, not only just for BYC or Zuki. Actually, all the long tail assets can generate yields for their holders, and of course that's an additional revenue streams for NFT projects. So I think DeFi called like decentralized finance. So you are not just limited to fungible token, but it can also be combined with like NFTs. So I believe within the growth of the whole industry, and of course NFTs, we'll see a lot of more NFTs can actually not only just be set as your profile pictures, but can actually use as assets itself to generate yield, to be traded, to have liquidity, to build different financial derivatives products on top. So I think that could be the next opportunities in DeFi space.
New opportunities in DeFi. So one of the things that I think that that is starting to enter into our consciousness is the fact that we want some sort of stability, right, with the price of your tokens, et cetera, et cetera. And so it comes down to, I'm going to say it again, right, where, I think that tokenizing real world assets or things that, is just a little more stable is going to have a lot of opportunities, especially in this bear market, because everybody's risk profile is starting to change, right? Number one. On top of that, when I look at the capital markets, right, there's the equity market, there's the debt market. Obviously, in DeFi, there's tokens. You can think about it similar to equity, but then what about bonds, right? You got Goldfinch, et cetera, but they're not, super mature, and it's not something that we talk about, right? So, I would say that if I have a hunch, I would say that these are areas of growth at this point in time. Somewhere that I don't think that we paid attention to during the bull market, right? Where I think that the wind is starting to shift and all of that. And on top of that, I think that there's new EIPs coming up, that could.
What happened?
Yeah, maybe just for the front desk.
I see someone there.
Maybe just
Okay, yeah.
Yeah.
Okay.
Let's keep going.
Yeah, just to continue saying that, how there are products that in the financial markets that we don't pay as much attention to during the bull market, right? Another angle that I look at things is, with the new introduction of new asset types. So for example, you have seen, for example, ERC 721, which is what defined the NFT standards, right? Back in the days, I think 2017 or something, which gave rise to these exchanges such as OpenSea, et cetera. And there are these kind of opportunities, right? So I would say that, with the new types of assets that's coming up, NFT royalties and all these things, could there be ways for different ways to play with DeFi products and all of that? Would there be exchanges? I would guess there's going to be some sort of downstream ecosystem buildup around these kind of asset types as well. Those are just some of the ways I look at things.
Yeah. From my opinion, I believe the next opportunities of DeFi is derivatives. Because as I said, I believe that whole blockchain industry is in is asset management industry. Because of blockchain for the Bitcoin and the Ethereum, they have different risk and return structures as any of the existing assets. It's different from any of the existing assets. So from the asset management side and from the asset allocation side, there is a need to input some of your asset into this industry. However, in this industry, like asset management, the derivatives is not developing as big as a traditional financial derivative market. I think it's because the real demand have not come out yet, and also the infrastructure is not very user friendly to the some big users, because even for some big companies, there is a there's a risk of security, and a lot of like old money, they don't trust the protocol. Actually, they more trust on the traditional regulation ways. And also in the traditional like the option, if you know the option industry, that there is built by the market makers, because that there's a very few people want to provide the option to others because the risk is too high. But after that, the BSM model, Black-Scholes, they come out with a model that we finally found out that we use a bond, we use cash, we can hedge the risk of the options we have. So there is a lot of market makers, they use money to generate as many as options you want, right? And they can hedge this risk to the secondary market. But in current industry, in crypto, and from my personal opinion, and from the also from what we are doing, and we don't think these market makers should exist in this blockchain industry. So what we are trying to do, we want to eliminate the market makers, and because everyone, the whole blockchains can be your counterparties, and the risk can be sharing by the market in traditional like derivative market. But in the blockchain, that risk can be shared by all the blockchain's token holders. We believe it is much more efficient way and also a way with fewer costs to the whole industry, and because this blockchain, well, what it wants to solve is at the beginning is a peer-to-peer with no intermediate. But currently, there's a lot of intermediate in this industry, and everyone actually want to be that intermediate to earn the additional monies. So I think it is directions of the derivatives, and I believe that derivatives in this DeFi area will be boom in the next bull market. Yeah.
So I definitely got a lot of time to think about this one, so this was good. It was, you guys are in the weeds in the DeFi space. I'm a little high level, building a platform, like looking at insights and more managing to make sure that that's good for you than I am like really digging in the day to day. So for me to be use case driven is probably more disingenuous than for me to look at like some of these higher level principles that I think are are extremely important. And every market I've been in, and I was in e-commerce with SquareTrade, and then I did a mobile social app with Scout, which was a dating app, had like 50 million users, and I was responsible for growth there. Then I did an open API service at Alcatel-Lucent Bell Labs, which is an API platform for all of these telcos. And then I had an accelerator for wearables and IoT, right? And so what I'm saying is, like, I've touched every one of these marketplaces over and over and over again, and some of them I've seen work. I've seen some, like my first accelerator was Stained Glass Labs, right after Google Glass. Threw it out there. Google bought the name, switched to wearable stuff. I look at this space, and every marketplace, there's like these 4 key components that really make up a market. And the markets that nail and make accessibility or accessible these markets, and I'll give you examples as I skip through each one, so you know I'm not totally full of shit, right? So in the e-commerce market was SquareTrade, right? And I remember when eBay, we were selling warranties on eBay. We were trying to get identity and location and, you know, ubiquitous notifications and presence. So it's these 4 things, Laipoon: location, identity, presence, ubiquitous notifications, right? Location, where am I at? Ubiquitous notifications, like email, when email first came out. So you see eBay begin to build a business model when LIPU, you know, presence, am I on network, am I off network? When that becomes accessible and available, boom, there became an economy, a real economy happened on e-commerce. Same thing with mobile, right? Look at Twilio, when they started making ubiquitous notifications very accessible, and the blow up of all those things, location-based services from, you know, what the iPhone is delivering, all the I can go on and on. There are key examples of killer applications that came out of the easy accessibility of location, identity, presence, and ubiquitous notifications. And so where IoT failed and where wearables failed is they were unable to make those key things accessible, because you can't get context. It's very hard to build a digital economy without it. And so as we move into this next phase, right, and as we think about the products that we build, if you can make those key components of context accessible within the framework of a decentralized architecture, right? And you're the one that delivers it cheap, and you're the one that people use it the most. LIPUN. Whoever dominates that and makes it accessible, each of those are important to deliver context. Until we have it, you cannot have context. A market cannot grow from $1 billion to $1 trillion market without that accessibility. And so all of those things, I can give you like banking examples and cool things that I want, but in all reality, like, we still haven't set that up so it's accessible and it's easy for someone to deliver that in those use cases. Anybody that does that, they will be another Twilio, or they will be bought by a Twilio. Like, it's an inevitability to make those things accessible.
Yeah, it's very, very sad. And for those people just that came in a bit earlier, we're gonna do 2 panels today. This is just the first panel, which is finish the 2 questions. So each panel, you know, have like 3 questions. And of course, we're gonna have like Q&A after the last but not least question. And we will airdrop like NFTs for those top, like the first 3 asked questions for the guests. So the last question would be, what do you think the DeFi will be like in 1 to 2 years? You know, can they tackle the problems you just mentioned, and you know, do those opportunities actually fulfilled in the future?
It won't matter. It just fundamentally won't matter. Anything I just said won't matter. It just won't, because inevitably the market dynamics are bigger than Reg's smart, witty things. Because what's going to happen again, AI, oh my God, we don't have any money, liquidity. We have to have liquidity. We promise we've got to like merge Web3 and AI to get liquidity. And there's going to be this inevitable flop back. I don't know if there will be credibility carried by the long tail investor, which is because they just are getting creamed right now, because the only way they get any liquidity is in shitcoins. And think about that, right? It's like, great, all the pumping right now is in those things, and we're building credibility back in the marketplace. It is this market maker issue that we have, and the issue that it is, in which you come from Facebook, so you get this better than most of the analysts I've talked to, and I talked about 200 for our startup because we interviewed them, right? I want to know where they worked at and everything. They could tell me that they wanted to look for companies that were 0 to 1 companies. A lot of them, none of them could explain what a 0 to 1 company like actually looked like. I didn't bust them for that. What I busted them for was they didn't know what an MAU DAU was. They're like, what's an MAU DAU? If you don't know what MAU DAU is, you probably don't know what a K factor is. And so in an area where you have market makers taking OPM, other people's money, right, and pumping it so that these funds, because the funds, the early stage funds exit before, way before some of these things even come public, right? This is factual. The market makers in this have blunted this generation's ability to build applications that are viral, that are engaging, and they don't even know the fundamental like triggers or, you know, Reed, Near, y'all, or BJ Fogg are better at this shit than me. But these guys are good. But it's obfuscated because it's just the market makers make the issue. So again, it's like it won't matter. It's going to go back and forth. But if you want there to be longevity in this marketplace, the market makers, the other people's money, doing ad spend, all this other bullshit, you need to focus on building applications that your user joyfully shares with their friends and like likes to pay for and stays for a long time and comes back once or twice a week because you prompted them the right way. Like, these are all things that are just basic that has been forgotten because investors just choke the market with paid ad spend in order to create this dynamic. It's all fun and games until we end up not actually building stuff with our money. Now we haven't. So I do think that it won't matter. I do think it comes back. I think it's going to be huge. So hang tight, but geez, build the LIPUN things. You might have a chance of building something that like blows up the universe in a good way.
Okay, from my thinking that a trend in DeFi, maybe in 1-2 years, is that a lot of DeFi projects will build their own layer 2 or even layer 3. Because that if you are a DeFi protocol and if you have a real demand, like user really want to use it, maybe like the compound, like MakerDAO, maybe another version of the compound and MakerDAO, this kind of protocol, they can build their own layer 2s because this will be much faster, and because this layer 2 is only for this protocol themselves. So, and we also have more and more like service infra providers for this kind of service. So it's much easier for DeFi protocol to build on their own chains, and this chain is only for their own service. And if this DeFi protocol, if they want to build on other layer 2, it must be that they want users from the another like layer 2 or another layer 1 blockchain. In this scenario, this DeFi protocol, it shouldn't exist. It shouldn't exist because that they don't have real demand. That they just build on another chain. Like maybe a lot of protocol that build on the zkSync to get some potential airdrops from these chains. But after the airdrop, if this there is a question mark that will this DeFi protocol still survive? I believe that most of the protocol will say it's no. They have no real demand. They're just there for the airdrop and for airdrop holders to do it. But for the DeFi protocol that may have the real demand, they can build their own chains, and it's easy and much benefit for themselves. Yeah, that's what I think the trend in this industry maybe.
So what's going to be the trend in the next 1 or 2 years? I credit this with the conversation that I've had with my friend over there, JJ. He's a crypto lawyer. And so right now, basically every DeFi company that I talk to, right, as a VC, whether I could deploy capital to, a lot of them ask me whether you have an offshore entity, for example, right? So obviously things are very hard here in America. There's a lot of hoops to jump through. JJ can tell you more about that. And those are some of the frictions that we're seeing, et cetera. However, would that still persist, right? Obviously, we're not having a lot of regulatory clarity, which is why Coinbase, Will, you can say more about this, is compelling SEC to come out with a more clear framework, at least within a reasonable time period. And I think that the reason why it might seem that SEC is taking a lot of their time obviously come from a lot of the political wrangling, how SEC looks really bad right now, especially having connections to FTX, et cetera, right? So they're in a hot seat, et cetera. But obviously, everybody has, the public, general public has a attention span of a goldfish. So we're going to move on, right? And when you look at other forces in the world, you look at, for example, China, right? They introduced their own CBDC, and now they're having a sandbox environment in Hong Kong, trying to come up with more favorable regulatory environment. Would U.S. Want to see, other parts of the world surpass America in terms of technological development, or having a new way of forming this kind of economy? I think that U.S. would, obviously U.S. is very capitalistic, and so they're going to make the decision to allow this, right? I think that. So if I were to say what's going to happen in the next couple of years, I think we're going to see much more clarity. And this is actually what's going to bring bigger capital coming into this space as well, because a lot of companies that I talk to, large corporations, they're exploring this space. They're willing to put down small checks, to understand about the technology and the trends and everything, but they're not tokenizing their assets yet, right? Should it be security? Would it be commodity? We don't know. And would they want to get into trouble? No, not right now, right? But do they have an interest? Yes, they have a strong interest. So that's what it's.
Yeah, in my opinion, I think first thing that has to be happening in the DeFi space is to lower the user barriers, which is, can bring more users to the space. So first, I mean, for DeFi, it's still quite difficult to, to like non-finance people or non-crypto people to understand it. All the like liquidity farming or staking or the APYs, it's really hard to, attract a lot of people into the space. So therefore, it's from like, fundamentally like a wallet logging, to on-ramp, off-ramp, it has to be solved. And the second is it has to be very easy to understand by, most of people, what is DeFi, like why they have to use DeFi. So therefore, it has to be more like assets out there to allowing, massive adoptions to actually understand the assets and use the assets. So that's number two. And three is from lower barriers, it has to be reduced the gas. Right now, Ethereum, if you're trying to, trading assets on Ethereum, I remember like last month, I was trying to purchase some meme token. Just trying to, try my luck to invest $100. It cost me like $80 on the gas fees.
Was it PP?
Exactly. No, it's actually another type of PayPay. It's called like Fade. But anyway, yeah. But I was trying to, purchase some like meme token, but the gas fee is crazy high. So I think, in the next 1 to 2 years, we're really seeing a lot of DeFi protocols are actually either deploying on layer 2, or they're building their layer 3, or they're building their app chains, right? And another perspective is definitely like Richard was mentioning, the regulations. We've been saying, people right now are focused on regulate on those centralized exchanges. But I think in the next 3 to 5 years, when the DeFi space actually growing bigger, all different, countries, government, they will have some certain of regulations on the DeFi protocols as well. So therefore, because we do have a lot of, investors from US, so they're always just telling us have to, be careful of SEC, just follow the rules if you guys are in the US. So I think, to be regulated, it's kind of, happening in the future for sure. Yeah.
Yeah, thanks for that. And we have, 3 questions opportunities for the audience here. So just raise your hand if you have any questions related to the topic, or I don't know, Web3 in general. Feel free to ask questions.
Yep. Every big conference I've been to, right, like the CoinDesk Consensus or Circle Converge, the big talk is regulation. Now, and it ties to this question. So do you think we'll figure this out in the next 1 or 2 years? or it may take a lot longer to figure out regulation and for the big money to flow in, right?
So I don't think I can answer that question because I cannot predict the future. So for that question, I would direct it to JJ.
What was the question again? Yeah, will we figure out regulation within 1 or 2 years, or is it going to take much longer? Everyone's asking for regulation.
I would say that right now, regulation is already there. I think most of what's happening in the DeFi industry is that the DeFi industry cannot accept the regulations as is because they can't exist according to current regulations. I think that if you're waiting for a change, it's not going to happen within the next 2 years. It's a political situation more than it is an actual legal situation. Gary Gensler already has his position. It's got to be someone else before those regulations changed or his hands forced. So unless the president changes and the president picks someone else that has a different viewpoint, it's not going to change.
Yep. All right, thank you. My name is Cassius. I have a question. You guys talked about DeFi a lot, and you didn't really mention any blockchains in specific. You did mention gas fees. I'm assuming we're talking about Ethereum in that case. Have you shown any interest, or do you know anything about DeFi on Algorand? Anybody in here have any experience with Algorand?
I know someone in this room does.
Okay, come talk to me after. But I just wonder, are you just chain agnostic, or do you have any specific chains that you're interested in that have to do with DeFi specifically, or how might that work? Maybe the chain doesn't exist yet. Like, what is the protocol that you think DeFi might be, more widely available in the future?
Okay, I can answer it first. As I just said, I believe a lot of DeFi protocol will build on their own chain, and like DeFi-DX is built with standardized, and I think it will be more and more DeFi protocol will try to build their own chain because much faster and much cheaper, and the gas fee can use your own token, right? So I believe it will be the trend, and I think currently a lot of layer 2 like the Arbitrum, they track a lot of DeFi users like GMX, right? They have a very high TVL, and but I think it's temporary. In the maybe 1 year or two, there will be many like DeFi on chain. Yeah.
So like layer 1s basically.
Layer 2.
Oh, you think? Okay, you think
Yeah.
you'll think they'll stay on layer 2s. They won't move to their own layer 1 protocol for DeFi.
No, they will just. It's much easier and secure to use to just build their layer 2 because security will be provided by the layer 1, and what they need to do is just change the gas fee to use their own token. And I think the issue of a lot of DeFi protocol is that currently their system token is no use to their protocol. Like Uniswap's Uni, it's not like a stock of their protocol. It's also cannot be used in their protocol. It's just a way to raise money. Yeah. So I think if a lot of DeFi they use their own layer to it, they can use their token to take the gas fee, and they will be a functional token, and it is much more better for the whole ecosystem. Yeah. Richard?
I think that Ethereum dominance is going to be there for a while, right? Because of how a lot of the liquidity is trapped in smart contracts, et cetera. And, obviously a lot of things are being built on top of Ethereum. You have zkEVM coming up, right? For example, et cetera. I do think, however, that there are other chains. The one that I'm personally really bullish about is Sui. The reason for that is because they bring what's called asset composability. I'm sure most of us have heard about smart contract composability, but what Sui brings to the table is that they have basically a Sui object that now is a new primitive for assets, right? So in Ethereum, you have your liquidity and your accounting trapped in smart contract, but now it's in SUI, it's a separate kind of state, right? And so that supports relationship definition across different assets, et cetera. So that's what's called asset composability. And with that, basically then, just take a very simple example with games, for example, right? You have, let's say, I don't know if you guys play, I think RPG games, et cetera, where you win sets of items. And after you get that set, you might unlock certain properties, et cetera. Now it's much easier to do in that sense. Now, mapping that to the real world, right? If we talk about, for example, in the 2008, you have the mortgage market crisis, and you have these collateralized debt obligations. They're basically packages of tranches of debt, right? Now you can basically map that relationship in SUI. So that's what I'm personally really interested in.
Got it. Okay, anyone have any questions? All right, I guess just move on to the next session. Okay. Thank you for that, guest. And what are you going to take from here?
Okay, our next session is how to build an ecosystem in Web3. Our guest, please. What? Okay. Chris, Dafu, Huomin, come here, please. And there are some pizza in the hallway, and feel free to grab it. We will start in 5 minutes. Okay. 是，要短一点，更短一点，要短一点。
Did you don't need me twice? You want me to come twice, or you have someone else to show? Well, I guess.
No. The Jack will take your spot. Thank you for sharing.
No, I appreciate it.
Sorry, what's for? Can I just add for Telegram?
Reg.
We'll try to finish at 6:30. Okay. 6:10.
Support on the identity side.
Hey guys, our second panel is going to start, and after the panel you can go the networking. Hello guys. Due to we postpone our first panel for a while, so let's start our second panel. how to build an ecosystem in Web3, and we are very honored to invite many founders and like senior, very senior levels, the protocol, incubator, exchange friends here to share how to build ecosystem into Web3. So first, let's doing a very brief introduce to our users.
Hi, everyone. Huomin from Mass Network, which is the Web3 social platform. And we are helping just raise the Web2 users from Twitter and giving some Web3 features to the Twitter extension. And I'm also the co-founder of NextID, which is the DID protocol. So we are just building the open social graph and the open identity graph. So for example, like for now, all the social graph, all the linking, Facebook and Twitter is just a centralized stored in one place. But we are just trying to give the open social graph. So all the dapps, all the developers, you can just get benefits from the open social graph to build the recommendation algorithm. Also, the maybe on-chain reputation and on-chain credit score. Yeah.
Thank you. Hello, everyone. Good afternoon. My name is Dafu, Dafu. I'm the partner at OnePiece Labs. We are a Web3 incubator started last year in Silicon Valley, mainly in Santa Clara. We got 3 arms: incubation, community, and investment. For incubation, we have incubated 2 batches of 33 projects right now. And for community, we are actively hosting 8 to 12 events every month in Silicon Valley locally, mainly on site. And right now, our community has about 10,000 Web3 lovers and developers, investors in our community. And for investment, we have closed about 42 deals on investment. So we are recently starting a new batch with a new layer 1 project called the Say Labs, SEI. So we really love it, and I'm gonna mention it too in the later conversations too. Okay, thank you, thank you everyone for coming. Thank you, Ness, for hosting us. Right.
Hey everyone, my name is Jack. My name is not up here because I was supposedly in the previous panel. I'm a co-founder of infrastructure layer, more like a node infrastructure, like a validator for proof of stake called KysenPool. Previously, I was at a couple of layer 1 chains, namely Algorand and Harmony. So this topic is very interesting for me too, because while at Harmony, I was growing the ecosystem, and it was during the peak, as you guys might remember, in recent memory in 2022. So that was pretty crazy. And then now I'm focusing more on the infrastructure side. KysenPool has been up and running in the Cosmos and Cardano and a few other ecosystems for the last 4 years now. And it's an active validator set. We can cover some of that in our talk today, but we're looking today into like other things around data availability layer, like Celestia, and also the upcoming Eigen layer, and also other things like fractionalized staking, where StakeWise V3 is launching. So a lot of very interesting things are happening on the more like the underneath the hood, like how does an ecosystem run for developers moving from Web 2 to Web 3. I think they're only focusing on what they can build on, but there's a lot of things that's happening underneath the hood. So yeah, happy to be here and answer anybody's questions.
Sure, thanks. My name is Kaimin. I'm serving as Chief Business Officer for Bitmart, mainly focused on incubation, investment, and listings. So we're very actively listing all those hot trend tokens, and very open to all kinds of projects, no matter it's in our mainnet or not a mainnet, or the projects around the ecosystem. As Daf just mentioned, the Say network was working them, and we're also discussing with Say network SEI regarding listing on Bitmart. We have a very deep conversation already. Yeah, so very happy to be here, and hopefully I can be very supportive for the future listings and incubations on your project. Thank you.
Thank you. So the first question today is, what do you think a good ecosystem look like in Web3?
Yeah, so I just wanted, for example, like us, we focus on the Web3 social side, and since we've already launched our token in many like well-known exchanges, and so for you understand, maybe we already have a lot of money, so we really need to understand how we can just build our ecosystem, how we can just use this money to just make our product more well-known, let more user on board to our platforms. So we also, so mainly we focus on three parts. First thing is about like we have our virtual arm. So I'm also helping our fund to just our fund to just invest in some early stage companies in North America. And for product side, we also have the different lines of product lines for like from the beginning, Mask is just the economic extension just to help the user bridge some Web2 users from Twitter and give some Web3 features like swap and DeFi protocol stuff and for all the Twitter users. And now we're just having more and more features like we have NextID. This is our the ID protocol, and we're going to spin off with Mask, become a more independent company. And also we have our grant program, and we work with Geekcoin, we work with Ethereum Foundation. So we just gave the grant for some very, very early stage companies. And for the developers, you can just directly get our grant. Basically, so why we want to just build all the ecosystem, and what's the difference between us and like exchanges? Exchanges are really easy to build their ecosystem since they have the listing, they have the venture arm, they are very fortunate, so they can just make a lot of things by themselves. And we are different, so we are just a platform. And for the beginning, we're just a product. The reason we want to build the platform is we want to build the ecosystem is we just want to onboarding more and more users and onboarding more and more projects on our platforms, on our product. And we want to just so for example, NextID is just the pulling off all the infra from Mask network, and we just make it more a B2B2C company. And so we just pull off the infra and pull off all the services from Mask, and want the benefits all the Web3 companies from NextID. And we also have a new product called Firefly. This is our new mobile end product. They can just help you to aggregate Lens protocol, Forecaster, and more product, so Web3 social protocols in one place. So basically, the reason we want to just build the ecosystem is just onboarding more users, like expand the Web3 social, expand our expertise side like field, and bring more Web3 social users on our ecosystem. That's our goal. Yeah, basically, that's also why we want to just incubate more and more product, more and more developers. They focus on the new stuff, like from DeFi and from the layer 1 and layer 2. So just want to give you guys a quick understand so how we just build all our ecosystem from side by side. Yeah.
Thank you. And so from my perspectives, I would say there are some key factors or bottom lines for a company want to do ecosystem. The very first thing I would say that for the team itself, the most important thing is open and share. That is very important. Frankly speaking, I've seen so many L1, L2 companies in Bay Area, and even though most of them are like valued at billions of dollars, and they have tons of money, and they try to pretend to be like, we are very active in our community, in our ecosystem. We welcome all the other projects, but actually, in fact, it is not. So most of the projects, they have raised a lot of money, and they mainly use this money to support their own projects, like the projects set up by their own people. And they provide continuous support and official support for all the projects. I would say that that's not a good way to play ecosystem. And you have to open up yourself, open up your entire ecosystem to all the outside projects. And I would say that's the first thing, very important, open and share. The second thing I would say, always globalize and decentralize. So you need to have different projects, or if you are running a community or ecosystem, you should have different background of projects or members or volunteers or community members in your ecosystem. So try to be globalized, find all the projects everywhere. And the next thing I would say is always about sustainability. So not just a one-time play. It is always keep continuing supporting your projects. That is very important. So sustainability. And the last thing I want to mention is that also echo back at Kaimin. So I would say of all the ecosystem we have seen, I would say SCI is one of the best for us because they are totally open shared and they are totally globalized, and they embrace the power of community, and they like all the projects they want to support, say. So I will say this is definitely a good team, and we will definitely go further with SCI. We're gonna have sorry for a advertisement. We're gonna do a hackathon with Say at the beginning of July, and also in the mid-July, we're gonna have a batch with Say. If you want to learn more, try to find me or my partner Murray over there with the white hair. Yeah. Okay. And also, sorry. So one last thing. I want to say that for all the projects in the same ecosystem, I would say most of them should be in a closed circle. Like they have everything. They have the DAX, they have the SAX, and they have compliance company and tooling company. I would say if an ecosystem has some project that have being in a closed circle, I would say that is even more helpful. That is I would say good ecosystem for me. Yeah. Thank you.
Yeah, is the question more on like how to grow it, or what does it look like?
What does it look like?
All right. So, I mean, Dafu has covered like a majority of what that looks like, right? But also, you got to look at the context. If folks in the audience are looking to build your own layer 1 chain or layer 2 chain, then all that applies, right? You need access from like exchanges to your token. You need your tokenomics to be healthy. You need like a reason for people to be there. Like Immutable X is like a game like company, right? So builders are building games, and their tooling's all towards game SDKs and whatnot. So you need that mission and attach yourself to that mission and vision as much as possible. Then you grow and bootstrap your community from growth marketing folks that actually talk about your chain to like infrastructure folks that actually run your chain, right? So the full stack of where people may want to fit themselves into, the developers building the SDK or the protocol improvements and things like that, decentralized and open, definitely that's what you should gun for. And then there's all this, bringing in the DEXs, bringing in the stable coins, bringing like the DeFi side of things, stabilizing that, then all the toolings to get people ready to build. The other part is if it's like something else, if you're building something on top of it and you want to grow and make your ecosystem, sub-ecosystem healthy, then you go further in, right? Like Web3 social, like Lens Protocol, Farcaster, Blue Sky, which is kind of new. It's not blockchain, but it's by Jack Dorsey, right? He touches anything, it turns to gold. So for these things, then you grow your ecosystem using the same playbook, but very, very focused on your Web3 social community, listening to them, getting the bots out of the way, putting reputation like systems in there. Just like how eBay grew its like ecosystems, they had this, peer review system, right? I'm a buyer, I'm a seller. This guy sold me something bad. He's never ever going to be on eBay again. So you need to tweak your ecosystem very, very specific to what you're building, say on top of layer 1 or layer 2 chains. So I think those are some of the basic primitives of what a good ecosystem could look like.
Okay, good. Thank you. I think they basically the other speakers are covering pretty much everything regarding how a good ecosystem looks like. I probably will add some thoughts on that. Which if we look at those different ecosystems so far, like no matter from the previous Ethereum or later on the Solana and right now the Sui, Aptos, and Say network, and also there's a lot of different name of the mainnet ecosystem like Cadena. There's many. I think that one of the most important thing for an ecosystem is make sure the product and the user, the developer onboarding is the most important thing. Because if you just directly having say I have an ecosystem or I have a mainnet, but it's very hard for developer to kick off from day one. right? For example, Cardano, right? Because Cardano, Haskell, it's a little bit, harder than Move or than Rust or than other language like Solidity. So, but they're catching up on building more tools on their ecosystem. So for the other good ecosystem, I see that easier onboarding, also developer friendly is the one. Second, of course, SDK definitely helps. Third is if there's a more like say developer helping tool or even low code, no code kind of tool that helps developer quickly and easily spin off their idea to be deployed on chain, right? They'll actually helps getting more user attention, from no matter from Twitter or no matter from anywhere else, in the blockchain ecosystem, in the blockchain society that can acquire user, right? So first you need a product, then you do the user acquisition. Third is the user deposit. It's basically the same concept as we're running a bank, right? You have the infrastructure, you have the security, and then you have building experts coming to build those financial derivative or even investment portfolios. Then you acquire their money, coming to the ecosystem. So if we look at Solana as a very good example previously, Solana is built on Rust, and Rust at the early stage is not very user friendly. But since the past yeah, it seems it doesn't like Solana anyways. Yeah, yeah, but yeah. Personally, I like it. During the past 2-3 years, more and more people actually dive into the Rust. Right? It's not that hard to learn. 2 or 3 months, probably you'll get it. So they have developer. Then they starting building DeFi and financial derivative products based on Solana. That's their step one. The second is in parallel, what do? They get in touch with Tether, with Circle, with several other USD stablecoin to ensure they have enough TVL and also liquidity pool on their ecosystem. Then the third stage is boosting up some derivative assets like NFT, like Magic Eden, right? And then not just people natively originally built on Solana, they do like 3 to 4 hackathon every year, even to gather even more traction from the developer group. And right now, Sui is doing exactly the same thing, right? They're in conversation with the stable coin, and also they're building their DEX. I know a bunch of DEX projects running on Sui. Actually tonight, we are going to having a AMA. If you want to open your Twitter, tonight we're going to have an AMA with those Sui DeFi projects. Yeah. So I think developer friendly and later user friendly is definitely too key to measure if a ecosystem is successful. Thanks.
Thank you. So the next question is how to build a good ecosystem in Web3 from your experience, and what are the main challenge you have been meeting?
So yeah, this is a really good question. So we really need to understand what kind of position we are. Like I said, so there's the layer 1, there's layer 2. So layer 1, their position is pretty clear. They want to build the developer tools. They want to build the earlier stage developer community and let all the developers develop some really interesting new things on their ecosystem. So like DeFi, like gaming stuff, everything based on that. So like layer 2, so they focus more on how they can just get their advantage, how they can just help the developers, help the users to just lower down maybe gas fee and expand the Ethereum. So every project have their own position and their perspective in the industry. And on our experience, we are a Web3 social company, so we focus more on you maybe heard about Tencent, or it's a Chinese company, also like Meta, Facebook. So we focus more on the product first. So that's also our perspective. So our token just want to be honest, our token is more like a governance token. It doesn't have any utility usage. So it's very different than any other like layer 1 or layer 2s, maybe layer 2 as well. So basically they are just a governance token. They don't have any utility usage. And so based on that, we are just to focus on how we can just build a product, how to onboard some new Web3 social on our product. So it's more like a PWA apps inside of a Chrome extension, and how we can just aggregate all the Web3 social protocol like Lens protocol, Farcaster, or Blue Sky. So all those are pretty buzzword recently, and we're not sure what's the future on that part. But we have so many new infra side things. We can just connect everything together, like the ID protocol, how we can just make the open social graph and the open identity graphs happen. And we can just index all the information from the different protocols and from the different platforms into one place. That's how we can just build our own ecosystem, like bridging, like bridge everything in one place. And we are the central, and we are the bridge to just bring everything, aggregate everything together in one place. Also, how we can just achieve this is, so as you guys know, so we launched our token a long time ago, and we are running pretty good on the token, and we are doing a pretty good market make on the token as well. So we can just build like a venture firm on top of that. And we also have our LPs to just help us to build the community, because they believe in the Web3 social, and we just like co-working with them, how we can just like invest in more Web3 social or Web3 gaming companies or early stage project. And so we make this, so we are trying to just make the Web3 social and Web3 gaming prosper. So we can just get benefits from this. We can just like aggregate all the protocols, all the tools, all the infras in one place. That's our way to just develop everything. So basically, you have to know your position and your stage. If you are just like a seed round company, it's really hard to build your ecosystem, because it needs a lot of fortune and a lot of money to build the ecosystem. So yeah, basically understand your position, understand your goal, who's your audience, who's your who you are selling with your idea, and your ecosystem is really important.
Okay, so regarding how to build a ecosystem, I do have some suggestions. So I'm gonna talk about it in different ways. Firstly, I would say money, then marketing, then branding, then community support and official support, then the projects and the products. Then the last one, I will talk about the resources. Okay, yeah, so 6 different stuff. Firstly, if you want to build an ecosystem, make sure besides the money you raise for your own projects, you also raise some money for your foundation to support all the ecosystem project. That's the first thing. So money. Then talking about marketing, it's always about how big noise you can make for the whole entire system. I would say try to do a lot of events, like networking events, after parties, holding conferences, some summit, and meetups, and of course, the most importantly for ecosystem, the hackathon. So try to work on some hackathons with different university, different community, different incubator and VCs, and let all the community know you have a project like this. Okay, that is the second thing about marketing. And talking about branding, so you may have just started and you have some money and you have some potential projects, then you definitely need something to like make yourself look bigger, like well-known in this ecosystem. So I would say work with some bigger brands, and no matter that is partnership or B2B business, or just like I said, some event partner or something, try to bond yourself with some bigger names and have your brand over there, and having everyone say, hey, this is back up or by Multicoin or A16Z, or they work with A16Z, or they have an event with Bitmart, or like with Pantera or anyone. So have your name out there, have your branding. Okay. Then community support. I would say not only just try to tell your projects, the projects in your ecosystem bring some traction and some traffic to your own project, to the whole ecosystem, but you also need to create some traffic for them and try to continuously and supporting these projects in your ecosystem, not just do one-time deal. We have done several hackathons before with some layer one projects, and frankly speaking, some of them doesn't even care about the developers, I would say. I don't know why, but after the hackathon, there was no continuous support for all the teams, even though they commit to build on this ecosystem or on this chain. So that is definitely a bad thing. Okay, have officially and very good support for all your ecosystem projects and from the community. And next thing I want to talk about is the product. I go back to Kaimin. So product is always very important. Try to have some recruit some star projects or to be star projects into your ecosystem. You can work with some bigger VC or incubator to deep incubate some projects, and finally, eventually, they're gonna be a star projects. Bring maybe, let's say, several hundred thousand users into your ecosystem. That is definitely a good thing. So definitely focus on your product and make sure your own product is easy to deploy. Then the last thing I would say still resources. Make sure that whatever your ecosystem projects are looking for, you have something ready for them. Like no matter that is like a token listing or market maker, compliance company, whatever they need, find something for them. No matter that is directly from yourself, your company, or from your vendor or partner. Okay, make sure you have the resources ready for all the projects in your ecosystem. Then I would say it won't fail quite bad. I would say it's a good way to success. I would say these 6 stuff. Okay, thank you.
Yeah, that's quite a extensive coverage there. I would say for growing an ecosystem, it's all about building relationships, right? Whether or not you're setting up meetups or online events and whatnot, you're actually building relationships. At the end of the day, it's a business about people, right? Whether it's the customer base that you want to target for, even if you're a chain, right? If a layer 1 chain, layer 2 chain, who's your customer base? Is it more on TradFi area? Are they more gamers that you're targeting? Or is it just like enterprises? Like you're building relationships. So as you build those relationships and understand who the customers are, then you build the things that they need, right? And try to create relationships with those builders. Like for example, if they are very concerned about volatility, you want to bring in a stable coin implementer that builds on your chain that you support, give them a grant, and grow from there. Then there are a lot of people that want to build pseudonymously sometimes, right? They're afraid of regulations and don't know what they're going to do if the SEC does come down on it. Then you make it open. Builders will come pseudonymously. We were surprised at Harmony when it was like a really pseudonymous team came in. We didn't even know what they look like, what time zone they're in. They came and built one of the biggest initial DeFi dexes on the ecosystem there, and then followed by we ran hackathons and whatnot. And hackathons were more of a marketing material, unfortunately. Except for unless you execute the hackathon end to end, like how say Polygon does it. The way that Polygon runs hackathon, very interesting. They'll set it up very, very nicely. They do the growth marketing thing around an ETH Denver event, for example. And then all the hackathon winners, the next day, they're all invited to a private breakfast, one-on-one, again, creating relationships with these builders personally and giving them a grant, saying that, hey, you need any support? This is the number you call, right? So giving that huge support to build that, hackathons will work only that way. But otherwise, hackathon is more for marketing. Like, hey, we're present. We're a blockchain XYZ. We're present. We have a hackathon. Oh, we have something on Gitcoin. Come build with us. It's very much a marketing strategy. Yes, it's a one way to grow your ecosystem, right? So you can get around get around without a hackathon or a bounty. Like other things are like that build all the toolings that they need for people to come in and eventually get to where you want to go with your mission driven, like, whether it's a chain or whether it's a Web3 social app or a game or whatnot. So yeah, there we go.
Yeah, so my point of view would be kind of a little bit interesting that, for any, say, mainnet, disregarding the crypto exchange, ecosystem, because it's a different story, right? For any like mainnet ecosystem, I feel like sometimes it feels like a little bit like a religion, right? You need a white paper, which is the religion paper, and you need gather more community members, not just developers. The reason why developers come into build on your mainnet is basically they look at the liquidity pool, of course the price, and also the community size, right? Because the reason why they want to build on the mainnet is they want to use acquisition. If they build on something directly already have a lot of users, then why bother, right? So for example, from our exchange listing perspective, usually majority of the Solana project will having both Solana and the BSC, which is the BSC token, in two minutes at the same time, right? Because to be honest, Binance, they do have a huge community as a crypto exchange, and so usually they will asking me, say, hey, can I have two assets available on your exchange? And I'm like, yeah, of course, sure, yeah, because it's definitely good for liquidity on different minutes. Yeah, so I think running community is very important for any minutes. As previously the other speaker mentioned that running hackathon is one of the way of doing marketing, and now it's even more and more interesting stuff coming out, right? Twitter Space AMA, like Bitmart, basically running 2 Twitter Space AMA every week. I mean, I'm so tired of, but anyways, and yeah, we have one tonight. It's like 6:30 something, I think. Yeah. And besides that, I think doing more like marketing campaign or like it's like something like airdrop, staking rewards, any kinds of thing that are able to attract traditional retail user is definitely a good way to acquire, to strengthen or to say to enlarge your community size, in order for the future hackathon to onboarding more, developers to build more sexy and interesting product on the mainnet. Then the ecosystem start, rolling and in a positive way. Thanks.
Thank you. Now let's go into the Q&A session. Any questions for the guests? Okay.
Mike, I have a two-part question. The first is around the enterprise. So most of you seem to have a good, healthy ecosystem. What percentage of that is from the enterprise, right? Like the global 2,000 companies, whether it's Walmart or the big banks, what percentage of your ecosystem is the enterprise? And the second question, slightly not related, is how do you create stickability, right? You may have a thriving ecosystem, but another project comes, makes more noise than your project. How do you create that loyalty and stickiness? So that's my two-part question.
Yeah, I'll take the loyalty one.
No, go ahead.
Okay, I'll take the loyalty one. So the reason why the investors, the retail investors, or any of our individuals as a customer, the reason why they hold the token is they invest into ecosystem is because they believe with such a move and such a vision that will make their money doubled. It's always about because think about it this way, right? The incentive, mainnet is mainnet. It's not like really 100% religion, but religion is about belief. But for investing into some mainnet or the layer ones, they're hoping that the investment could be double, triple, even 100x, right? That's why always people say to the moon, right? So I think loyalty is really based on how you can maintain the ecosystem up and running and make sure the price doesn't go too ugly, like 90% off, that kind of thing. So remember so if we recall the memory on the FTX collapse, Solana still kind of maintain the price at certain level, even that drops hugely drops, right? But because on the spring, and so last year a lot of people saying especially from exchange saying Solana is dying. But actually, now they're coming back and still running their hackathon, which means, okay, I'm not bullish on Solana. It's not an investment advice, anyways. It's just saying the way how to do things. They consistently doing grants and hackathon to make more engagement and more voice and more pace on the marketing rhythm.
On the question about enterprises, I think it's close to 0. I'm not very confident about that number, but I think I'm pretty close. And then your second question is,
How do you create
stickability. It's very hard. I think if you are a layer 1 foundation, you are the one that's picking the winners sometimes. That's unfortunate. Again, it's depending on your gut feel about relationships, whether those folks are going to stay around, if it's in the doldrums or not. One of the chains I was with had the largest DeFi in the world at that time. It was DeFi Kingdoms, and they didn't stay because even though we loved them and even though they were good people, but it's because I don't think the chain did them right when there was an event that happened, and we understood why they left. So it's very hard to create stickability. It's really about supporting them as much as you can. And if something else does come up, what do you pick? Do you want to pick the high growth one, or you want to continue supporting the existing one? It's really a tough choice.
Yeah, so frankly speaking, for enterprise ecosystem, I haven't seen many in Web3 yet, so I don't know. Yeah, but however, there are a lot of enterprises entering Web3 industry into blockchain technology. So like Microsoft, AWS, Google Cloud, they are actively sponsoring a lot of different events or hackathons. So I believe they want to enter this industry, but I just haven't seen many enterprise ecosystem or something on Web3. And what? Oh yeah, Nike Land. Yeah, Nike Land. I like them. Yeah, yeah. And talking about the stickness, I would say, no offense, but I usually consider it as dating. Yeah, or you can say a relationship. When you date someone, no matter there's a man or woman, so you always want to attract them, right? By your charm. So you need to know what your target customer want. What are the needs from the ecosystem projects? What they need, right? You need to meet them. That is very important. So that I consider that as a charm to your partner. So that is one thing. The other thing I would say, that's only the first step. So you use your charm to attract these projects into your system. Then you need them to stay here, right? So you need to figure out who are your target customers. You need to know specifically and very precisely what they need, and you offer them. Then they're gonna be here. And the next thing I would say, like I said, like I mentioned, keep supporting them, still kind of like a relationship. You need to care about the other half, right? You need to let them know you care about them. Then they're gonna stay here because they feel you care about them. However, if they go to any other different ecosystem, they may not have the same support. So that is very important too, I would say. Yeah.
Yeah, I think yeah, all the other speakers are answer the question pretty well. But I have another. So recently, I'm talking with so many large companies like Plaid or Microsoft or Google. So if you are just being a loyal customer, you're really easy to just build a relationship with them. You are just spending money and use their service like AWS or Google Cloud. It's easy. But when you want a partnership with them, let them to use something from you, is extremely hard. And they want to build everything in-house by themselves. I think it's understandable because they just don't want to build everything by themselves. This is more stable. So when they have some problems or data breach something, so they know where's the problem. So but when they just partnership with some seed round stage company or Series A companies, it's really hard. So I think, yeah, if there's someone here is working for Google or for some large companies, I think it's no harm to just maybe take a try, and we can launch some testing, like beta testing. So so when I'm talking with Plaid, talking with Google Cloud, so they're still thinking about like using a third party is not good as we can make something in-house, and we can make our monetization model and based on ourselves. But you know, Web3 world is open to public, it's open source, it's no more centralized things. So maybe like embrace the new changes, and yeah, want to have more talks with more larger companies. But I know it's pretty hard, and everyone I'm talking with is like Web3 lead product manager from Google, so they have the pressure from their manager. So I know it's hard, but no harm. We can take a try. Yeah. Also, we can do more things together. I'm not sure yet, but yeah, let's see.
Thank you. Okay, last question today. Okay.
So I hear you guys talk a lot about hackathons and the importance of attracting developers by way of hackathons, but also, you know, you mentioned price and things to attract customers as well, or people or users, if you will. What do you think is the single most important thing? Is it developers? We've named a couple of different things. Is that we want to know how many people are going to come build on your protocol or on your project? What do you think is the most important thing?
Yeah, so I think developer is the most important. You really need to just build the trust and let the developers understand what you are building. So I've tried many times with like talk to many dev rails from the different projects. So I think the documentation is the most important when you just want to get some developers on board with your new protocol. But if you have a really shitty documentation, so everyone don't understand what the fuck are you talking about, like what the fuck is your protocol, so no one will just build something on you and use something like people will. So people love Move, but people maybe Move has so many advantage like compared to Solidity. But so I think the community is still pretty small at this moment. I think there's so many problem between Move and Solidity, and so I think that's the problem the layer one need to figure out. But personally, I think for all the hackathons, for all the developers needs, documentation, dev tools, and what kind of support you can give, like from the dev rails or dev advocate, they can directly talk to the developers. Let the developers know we really care about you. We really want to onboard you to our ecosystem. Build something with us. You can run your company on our protocol. It's really important. This is the first thing. So make the respectful conversation and make the respectful partnership and relationship between the projects and developers is always the first thing and most important thing.
Thank you. So sorry, I just want to be clear. Like you are talking about like developers versus like marketing and community.
Sure. Yeah. Whatever you think is the single most important thing. Yeah.
Perfect. So I would say, frankly speaking, we definitely care about developers, and especially for layer 1 or layer 2 projects, I would say developer is number one. Very important stuff. However, I want to say one thing that for me personally, so personally, I consider marketing, community, branding, these kind of business stuff the same as developers. So developers, they are making the product happen, and how good is your project or product, that depends on your developer, right? However, how many people are going to use it, how many people are going to love it, that is on business side. So there are so many examples, like Bell is not the first one to invent the telephone, right, the cell phone. So but he brought this into the entire world, the same as Steve Jobs. He is not the first one to invent laptop or like a desktop. So but he brought Apple to the world. So I would say developers, how smooth, how good is your product depend on your developers. However, how many people are gonna know your project, gonna use your product, that depends on the business side. So for me, these two, the same. Yeah, same important. Yeah.
I think that's a really tough call, because I believe it's all about execution. right? It's not one thing, but whatever thing that the team latches onto, execute on it, right? So, for example, if Avalanche, the reason Avalanche is where it is today is because they executed well on marketing, growth marketing. You go to the events, a huge red, banners everywhere. They got a Formula One or Formula E car like sitting there, parties, bringing people in and through marketing and whatnot. So they're just executing it really, really well. And then other chains that have executed well, the only exceptions are two, right? Well, Ethereum is kind of doing it now. They're becoming better at execution. Bitcoin is like the one that didn't have anything to do with execution. Because right now, all the chains doesn't quite have a competitive advantage, right? You can build on anything, anyone on a chain. Yeah, sure, you have to learn Rust in some places. Polkadot may be a bit hard to run. Anything EVM compatible, you can probably find more developers now. But it's very, very competitive. So now, in a different era, we are talking about execution, right? If you execute as well as these teams have done before, Polygon is where it is because they execute really well in pulling in Aave at the beginning and giving the incentives to all the DeFi farmers, like, I don't know, hundreds of millions of dollars worth of Maddox, right? So they executed well on there and they got lucky. That's why they are there today. So it's about execution and luck. I think that's mainly how ecosystems can grow, because today is a different day. It's not the early days. You write a really good white paper, concepts are really good. You may be better than Ethereum, but Ethereum's already there. How are you going to be different? You got to execute. Right? Focus on what you want to be good at, execute on that, press down on that. It's just like a 0 to 1 startup kind of concept. Just do that.
Yeah, thank you. Yeah, speaking of which, I'm about to let you guys go, but somehow I realized, since you mentioned about BTC has no like a community of developers, right? But recently, have you guys noticed BRC20 and BRC721, right? So if you think about that way, right? So I think it's kind of a different example. The other ecosystem, yeah, we have tools. Yeah, we have dev, white paper, we have everything. But if you look at BTC, right? What they have? Community. They only have community, and they're able to convert the believers into developers. So right now, the BRC20 is really something that hot on the trend, and so that's making us opening a special trading zone for BRC20. I know it may sound like a joke, look at the Pipit ordinals, right? They're or memes, or saying just NFTs. It doesn't make any sense. But look at how strong. Look at the trading volume. That tells you how strong their community is. And those people are actually converting into developers, right? Back in Miami, BTC 2023, I was speaking with small panel just for BRC20. There are a bunch of BTC developers. I mean, it's my first time in our lab, meeting BTC developers. Trying to building on the try to build on Bitcoin layer 2. Maybe it's layer 2 or other kind of tools, but they're not just building memes or NFTs. They actually have BTC domain coming out already. So that is something in our exchange we're integrating with them. So in the future, if you withdraw your BTC, you can directly put your name.btc instead of the address. But that's still on the integration. But the point I'm trying to make is the Bitcoin community has previously have no such a developer if you compare with these days BRC20, and even BRC 721 is coming out. I don't know, is a joke or what, but it's real happening. Yeah.
Thank you.
Thank you, guys. Okay, a quick comment. Okay.
Speaking of community, you forgot Hex and the Hexicans and Pulse and PulseX.
Thank you. I think that's all the for today's panel, and thank you all for sharing and join, and yeah, just have some pizza and drinks. Thank you.